Welcome to Tradier's The Trader's Edge. I am Jim Muriel. That is Bob Iacino. Bobby, so today we heard from the Fed, which was it's confounding to me. The chairman came out and talked about he's hawkish. We want to get back to 2%, yada, yada. And then, all of a sudden, we are slowing down the pace of runoff, which is, in fact, an ease. It's this much of an ease, but it is less quantitative tightening. Why the doublespeak?
It is a minute ease. And that's the funny part to me. I mean, we talked about this a little bit doing the video for the rundown. I think that there might be a little bit of politics involved. I don't know. Don't call me nuts. Don't scream at me. There might be a little bit of politics involved. You can't say that inflation has slowed its progress to 2%, right? One reporter asked what I thought was a good question. I wish you would have answered it. She said, the next meeting's June. Have you run out of time to ease this year? And he was like, no, I wouldn't say that at all. Yet he doesn't have any confidence. By him, I'm saying the whole committee. They don't have any confidence that inflation is going to move any further toward 2% the way I read it, but they eased. So what do? You put more on the fire when you said inflation isn't moving in the right direction. You put in a tiny easing.
Yeah, it's so funny. Like I'm a tinfoil hat, a full-on member of the conspiracy theory club, that there is an element of politicalness in the Fed's movements. And I believe that that's to be true. And the only reason he can do it this way is because if he actually eased, which anyone actually understands, they'd be like, you're easing. But only select people understand what's slowing down quantitative tightening. I'm not making it out like we're genius or anything. This is just what we look at all the time. And can you imagine those Republican politicians going, could explain this again? What he's doing again? No, because they can't get it because they're, I would guess, inferior intellect. I'm on a rant right now, and I got to slow
down. Look, I have a relative who's a barber, and he'd be able to tell you if your hair was cut with scissors or clippers. I wouldn't. Right. It doesn't make anyone academic to understand what happened. It's just what we look at all day. And what happened today was a tiny ease.
Tiny bit of an ease. Okay. As you know, and I've said this a million times on this show, is that you may think Bobby and I are crappy and full of shit. We don't have a good opinion, and that's fine. But you cannot deny the fact that we get excellent guests. Today we have Mitch Roschelle, who, by the way, and I hope Mitch is listening too, because for the first year that we knew him, Bobby always called him Mitch Roschelle. I think he really just wanted to will him to be an Italian, which he's not. He's not an Italian. But he's also one of those guys like Art Hogan, who, as their hair gets grayer, gets more and more handsome, and that's very irritating. So let's bring in our buddy, Mitch Roschelle. Do you like? Can you go with Mitch Roschelle? Hey, how you doing, Mitch?
Hey, I told you guys in Miami that I grew up in a 80% Italian neighborhood.
Yeah.
So you said Bobby. You said your father had a Calabrese accent.
Yeah.
I could probably parse through the accents. It is gravy and not sauce that is served on Sundays. Let's get that out of the way. But if you want, I will, in my answers, work in some. I could do Italian slang and Yiddish slang in the same sentence. Let me see if I can pull that. I could do it all.
Pull that off. That I want to see.
But when I see Greek men, Jewish men, Italian men, it is pretty clear that we all pretty much come from the same area, right? I mean, everyone has the same exact characteristics. I mean, look, if Bobby and I told someone we were Jewish, they'd believe it in a heartbeat, except as soon as we started talking, they know we
except for the tattoos on Bobby. But
the Jewish boy does not have the tattoos because the Jewish boys are scared of their mother. Italian boys are scared of their father. Can you confirm this, Mitch?
100%. But you know what's interesting about Greeks, Jews, and Italians? There's no hummus with the Italians.
No.
Right. So the Middle Eastern, Jews, hummus is part of the diet. Greeks, hummus is part of the diet. But for some reason, Italians, they don't do that with chickpeas. I don't know. I don't understand.
We have chickpeas in the culture. As a matter, we have in salads. We have them in stew. We're just why grind them up? They're perfect. What's wrong with that?
No, maybe at the time they came about in the Middle Eastern area, the Jewish area, the Greek area.
Yeah.
Maybe the Italians had more money and, they were trying to substitute food. I'm not saying the whole time, but there were times where the Romans were trying to conquer the world. Maybe they had plenty of meat when nobody else did.
They were too busy conquering. They didn't have time to grind the beans.
We invented the garbanzo bean. You guys know that, right? I will say Italians invented anything, so it doesn't really. Don't even listen to me when I start talking.
Right, and they claim to invent things, but I'm not.
But they didn't invent it, but they can fix it. Whatever it is, they can fix it.
Hey, we had on our other show yesterday. We had a guy who we were talking about being curious, and I said, being lack of curious is one of my superpowers because I grew up in a household where 11 people lived in a 2,000 square foot home. And at any one time, at least 3 of them were being suspected of a relatively major crime, whether it be local or medium. So if I was questioned ever, I could, I don't even know what you're talking about.
It wasn't me. Just go with it. Wasn't me.
Yeah, I got to go. Right. But anyway, so did you hear what we were talking about in the intro? We were talking about this. I think it's somewhat confounding. Hawkish. We want 2%. Oh yeah, we're easing a little bit. What's your take on that?
Well, first of all, and I said this at lunch today with an investor. It's very simple. Jerome Powell was a history major undergrad, and I think he's more focused on how he will be remembered in history than he is focused on the economy today. And I kid you not. I said at the beginning of the year, and I may said it on your show, one of my previous appearances, that you can't touch interest rates from July forward because you know what? Then Powell's going to be accused of interfering with the election. Right. So if there was a time to play with interest rates, it was in the first quarter. The first quarter is now gone. We're in the second quarter. He can't fuck with it. I had to say that. He can't. So what's he going to do? This reminds me of Greenspan reading in that monotone voice from that big 3-ring binder and the entire world parsing his words to figure out what he means. Okay. And Santilli, looking at how fat the briefcase was on CNBC, we're almost back to that. We have inflation. It's not going away. It's in commodity prices. It's in producer prices. It's in consumer prices. The consumer's demand has not been destroyed. It's just on a credit card. Businesses are definitely slowing. They're cutting expenses to create profits. Okay. It's a setup for a slowing of the economy. And at the same time, we have disruption in the Middle East, which has got elevated fuel prices, which we talked about when we were in Miami 2 weeks ago. So I don't see inflation ever getting to 2% between now and November. And Powell's going to have to sit on his hands.
So you mentioned a couple different assets that it's showing up in. You didn't say real estate. I assume you believe real estate too, which is more of your expertise than anything else.
Yes.
I can tell you something anecdotally that in my neighborhood for 10 months, no house came on the market. Okay. 2 came on the market about 3 weeks ago, sold in 2 days for like 20% over asking price. And which the amount that they sold for was about 25% more than anyone in this neighborhood believed the home was worth. Then this last week, one comes up again. Even though we adjusted, it sold for 25% more than what we even had adjusted in our heads in a couple weeks' time. I think there's something. Everyone in our neighborhood is like all cheering it. I'm the only one who's not, because something to me looks unsettling. Like there's this weird pent-up demand, and I hate to see markets move in ways that I can't understand. Am I crazy?
No, well, when you have pent up demand and no supply, you get price inflation, right? We were awake that much in, freshman econ. When you create more supply because you see increasing levels of demand, that's when you have deflation, right? The second part of my sentence, nobody's creating more supply. We're also in the time of the year when people buy homes. This is prime time. I did a segment on Fox Business with Stuart Varney like 2 weeks ago, and Jerry Willis did like a reporter hit before me saying that according to Redfin, these 2 weeks were the busiest, most important weeks of the year in terms of home purchases. And that was like 3 weeks ago. So we're right. And that was probably, Jimmy, right when you were, seeing that happen. So there's that. But interest rates are likely going up sooner than they're going to go down. It's a leveraged asset class, but we have a tremendous supply and demand imbalance with single family homes and apartments in this country. So I think that there's inflation pressure. If you look at shelter costs in the CPI, shelter costs are 35 to 40% of the CPI basket, right? That's so, so I left out that one as you pick through the asset classes. But the fact of the matter is, there's no way inflation is going to be stuck at 3 for a long time. The Fed can't move the goalposts because everybody's going to call bullshit if they move the goalposts. And if it's stuck at 3, then if wages can't keep up with inflation, if there isn't a meaningful spread between short-term interest rates and the inflation rate, everything's out of whack. So I don't see the Fed lowering interest rates, but I just think the timing is terrible in an election cycle. And that's going to weigh very heavily on it. By the way, it's just a matter of time before Biden figures out how to start jawboning Powell too, because he's going to do it, or one of his people.
Yeah, I want to ask you, do you think this is something that where there's different, I mean, I think this is always the case, where there's different levels of homeowner sort of movement or housing movement in different pockets of the country? And the reason I ask is where I live in Southwest Florida, existing home sales are not livable for what they sell for. Everything that you buy that's an existing home is a teardown. I mean, they're just not, it's Florida, right? I should stop there. So when you look at, I got to get a real estate report all the time because obviously the realtors are always looking for homes. I live in one of those places for the second time in my life where everyone seems to be a realtor. And the March average sale price.
What happened the first time? Oh, I remember.
California. That was California.
Oh, that was, I was going to say 2008 when everything the bottom fell out. But anyway, yeah.
Well, yeah, it was. It was 2004 when I moved there. So, but just everybody had their name on a bench in Southern California. But
yeah.
So March average home sales price down 1% from last year. March percentage of last list price down 1.4%. Average days on the market up 125.8% March to March. March monthly supply of homes up 57.6% in my zip code, obviously a very small area. Mm-hmm. Is that because everything is new, or it's just this a specific pocket experienced that large influx of growth and now it's just exhausted itself?
Yes. It's both. It's incredibly local. There's nothing more local than residential real estate. Mm-hmm. Number one. And number two, you can't look year over year because there's so much distortion in the base year. Last year was probably the end of that crazy arc. So you really can't look, at and by the way, 1% year over year, to me, some of the stuff should be down. Here's the issue you have. Asking prices are still insanely, in Florida, are still insanely overstated.
They are.
And that's distorting every statistic. It's distorting sales price. It's distorting days on market. It's obviously distorting percentage of ask. And that's not changing. So the neighborhood I live in, I'm in Florida also, lest the audience think otherwise. Okay, that's Florida. Okay. Okay. A little story about the plant outside the window, which I could tell if we have time. But in any event, there are a decent number of homes that have listed on the market in my community. They are either tear downs, like pieces of garbage tear downs.
You wouldn't live in them.
Wouldn't live in them. Some of them have been doing really well as rentals, but the people who own those know that gravy train is slowing down. Okay. Or they're perfectly livable, but the seller wants a ridiculous premium for that home being livable. And I'm talking about a 7-figure premium for the home being livable. But there's one literally across the canal from me that went really quickly because it was a smaller home. It was 2,900 square feet. It was a ranch, very livable, didn't need a lot of work. The ugly things that had to be fixed, the seller fixed, and it was an attainable price, right? The number was just something that could clear the market. If they asked $1 million more for it, it's not going to clear the market. Now, when I'm talking about $1 million more, I'm not talking about the average house in America. All right. But if you look sort of by and large in Southeast Florida, with the migration that's come into the Sunshine State, and we're talking about hundreds of thousands of people moving here, there's demand in excess of supply. The challenge that Florida has for younger families is public education, because there just isn't, the system can't handle that influx of people. And building school public education infrastructure is hard, and because you got to deal with government bureaucracy, and building private education, which is what they're doing, right? Some of the hedge funders from up north and were from Chicago, the guys who are coming down from Citadel, folks who are coming down here, they're going to build their own school. They're going to recruit people from around the country and build their own private school. Because if you're in Palm Beach County, you can't get your kids into the Benjamin School. There's no more seats. That's where Tiger Woods sends his kids, or Pinecrest, where Messi sends his kids. I mean, you just can't get your kids into those schools. But that's not the average person. The average person who's going to move from the Northeast, the Midwest, from California, that's going to send their kids to public schools. There's just not enough room. There's not enough classrooms.
So as a follow-up to that, a lot of people are waiting for owner's equivalent rent to help out the CPI index. And I'm not sure what part, if any, that is of PCE. So I have put up a chart that I'm hoping that Jeremy in the back can put up. This is the average home price. Okay. And right now, President Biden is proposing new energy requirements, new energy regulations on new homes that are being built, that some people are saying is going to raise the average home price by about $31,000. And it's going to be the home builders that get the tax breaks in order to be able to afford that. Whether they pass it on the homeowners or not, I'm not sure. The reason I wanted to talk about residential is this going to continue this path of inflation that I think all three of us agree we're on right now, which is 3% or higher? Is owner's equivalent rent trending lower or not?
No, it's probably flat to trending higher. So we have excess demand over supply, which is upward pressure on prices. In a period of rising prices, think of any other manufactured product, okay? Those who make the product would make more, right? Because they're selling into a market with higher prices. It just makes sense. There are three reasons why people aren't building more homes: land, lumber, and labor, okay? And until we solve the cost of land, we're not going to create more supply. Until we create less regulation, which unlocks land supply, we're not going to create more supply. So if you, Biden and company, put more regulations, energy efficiency, use of certain building materials, you put that pressure on the home building industry, they're not going to do it. Okay. Period. End story. And by the way, the stupidest thing from this week is to basically outlaw Wall Street from buying single family homes, because somehow it's Wall Street's fault that people can't buy homes. Let's talk about the homes to rent business, right? Single family homes that people rent. Basically, Wall Street's providing a service to homeowners to get people sort of ready to live in a home as opposed to living in an apartment. Okay. I think it's important. It's a gateway to potentially owning your own home. And so you take a market participant that's providing liquidity into a market and you kick them out of a market. The last thing the housing market needs is more disruption. So I don't think there's anybody who runs a government agency that has any responsibility over housing at the federal level that knows the first thing about what really works in the housing market and what doesn't.
So to put a bow on this, because you said land, labor, live,
lumber,
love, laugh. You said a couple things, but you didn't say regulation. And
I have two more L's, Jimmy. I have laws and lenders. There's 5 L's. Okay.
And live, laugh, love is not part of it. Okay. It's on the wall here. Okay. Because I always wondered for a long time, and I did a little bit of a deeper dive months ago, like why nobody builds like in my area or way, like just a solid 3-bedroom, 2-bath, nothing special, nice home. It's a great neighborhood with great schools because there's no money in that, right? Because the regulation part of it eats up so much that the motivation is only to build the $900 to $1.2 million home in this area. Is that correct?
But no, yes and no. So, but there's one thing you're leaving out. Home builders, forgive me if you're listening and you're a home builder, are the stupidest people in America because they are lather, rinse, repeat entrepreneurs. And they have not changed the way they build a home since they built the first home. However, Levitt built Levittown in the 50s in suburban New York is the same way these guys are building homes today. Okay. We actually have a company, little shameless plug here, but we have a company that is building homes to rent in Southwest Florida. And we're using a completely different technology to build homes. We're building panelized construction. We've disintermediated the entire stick-built housing model. And we can deliver homes way cheaper, way faster. And when we do that cheaper and faster and better than the stick-built variety, we pass the savings along to the tenant, okay? So there are operating models, but God forbid a publicly traded home builder that's also in the homes for rent business depart from their model of building them stick by stick, brick by brick.
Is there any way can you send me any info on that? Because I'm wildly into that. It's become a recent kind of passion of mine is construction. Like, why the hell do we use the asphalt roofs? You know what I mean? Like, is that really the best and cheapest way? No, right?
No. And here's the thing. So we're in Florida where storms with wind and rain are an issue. I don't use the H word because I'm superstitious, okay? But we build the homes out of steel panels, okay? This is the same way warehouses are built. Why is it that the people in the mini storage business have figured out how to build mini storage facilities, but the guy who builds houses can't figure out how to build a house, okay?
Yeah.
So in any event, that's what we're doing, but we can build a house, literally the 3-bedroom, 2-bath that you're talking about, the 1,900 square foot house. We can build that in weeks, not months, not years. We can build it in weeks and we can deliver it for a price that the marketplace can absorb and afford. And there's no reason why everybody else isn't doing that. Okay. It's because they, like my dad taught me how to do it. Like, look how long it took them to go from nails to screws in the home building industry. Okay, like that. That was their big.
The physics of that is pretty easy. A nail is smooth. A screw grips.
Bobby. Yeah. Well, one needed a hammer, right? One needed a guy with a hammer, and the other needed a guy with a gun. Like it's like.
I wish you were in Arizona because we have a lot in Arizona that we're planning on building on sometime in the next couple of months. But I don't really feel like GCing something from Florida to Arizona. I don't think that's going to happen.
You have my cell phone number, my friend. Call me anytime.
Yeah, I think I probably will. So what did the Fed do today then?
I don't think I think they bought time. I think they just bought time. They don't have a story to tell. They wanted to stick with the narrative that inflation is easing. Inflation's getting better, but they don't have facts to support that. And here's the other thing. The Fed has the jobs report numbers ready. I mean, like they have data that we don't have. And I think we're going to see it in the jobs report. Here's what I saw in last month's jobs report. Forget about government creating 75,000 jobs. Forget about the healthcare sector creating jobs. Forget about leisure and hospitality being back to where it was pre-COVID. The white collar jobs, technology, business services, those kind of jobs, 16,000 jobs. That was driving the bus. Those are high paying jobs. That number is slowing. I think that number may even go negative. We may see that number potentially go negative. That tells me that corporate America is not creating jobs. And if corporate America is not paying jobs, we can't backfill with government jobs without increasing government debt. And the healthcare jobs are just a burden on society anyway, right? Because we have unfunded, healthcare systems in this country. It's all government money anyway, Medicare, Medicaid. So I don't see anything in the jobs number that, like if I saw 50,000 construction jobs or 75,000 manufacturing jobs, that would really tell me, okay, that's a sign of a robust job market. I'm not seeing that. I'm seeing white collar jobs slowing, government jobs growing. And the other thing, those job numbers are heavily inflated by migrants starting to get work, which no one wants to talk about. Powell certainly doesn't want to talk about it. He dodges those questions, not at the Wednesday presser, but when he's on the road, he dodges those questions, number one. And number two, I also think some of those are second and third jobs for a lot of people who can't make ends meet.
Yep.
And you shake those, Kudlow talks about it all the time. You shake that stuff out of the system, you'll find that the job market isn't nearly robust. And that's what those, Austin Goolsbee may not know it because his head is completely up the president's butt. But Neil Kashkari and others guys around that table know the truth.
No, and I agree with you 100% on this. I believe that the BLS Labor Data that we get once a month is the greatest story ever told. It is largely bullshit. Just all you have to do is look. You saw that report that came out today by another government entity with the initials BED. I'd never heard of it before. And their suggestion, another government entity, that in the Q3, we lost 195,000 jobs, not gained 450,000 jobs that the government wanted us to believe. So make your own decisions on that. I think it's bullshit. I will say that today the market did think that it was this much of an ease. Stocks turned around, gold turned around, silver turned around. When we were in Miami, you took on a Jim Bianco opinion, and this is very unusual. Again, you guys, if you're watching, that I agree with you 99% of the time. Mitch took you on, and I liked Mitch's argument, and I want to dig into it a little bit. We were talking about commercial real estate market. I was under the impression that banks held these notes. Commercial real estate market is shit. And when it starts to go, it could be somewhat of a systemic issue. And you said, not so fast. Can you tell us?
So first of all, other than local banks that hold mortgages on an office building where they have a banking relationship with that customer somehow, they hold a mortgage on the car dealership because they have a banking relationship with the guy at the car dealership. Okay. Aside from those that are on the books of local banks, by and large, most commercial real estate is financed by commercial mortgage-backed securities. This is a little reminiscent of the financial crisis, so don't think I'm yelling fire in a crowded movie house here, okay? But those are sophisticated bondholders, okay? These are 65 to 75% loan to value. This is a complex capital stack. If those loans start getting into trouble, it means the bondholders may not get the distributions that they thought they were going to get. But there's a waterfall there, and it's the bottom of the capital stack that gets hurt. The bottom of the capital stack tend to be risk-on investors. The top of the capital stack tends to be, institutions that want rated paper. Okay, so let's realize that it's not banks that are going to fail. But then again, the financial crisis was caused by mortgage-backed securities. But those mortgage-backed securities were at 110% loan to value, not 65 to 75% loan to value. Okay, Here's the thing: the only subsector within commercial real estate that has obvious weakness is the office sector. Okay. And we can all agree on that. That's a headline leading story. But as I said in Miami, and I'll say again to your audience here, the same people who are calling for the demise of downtowns in the office sector are the same people who are calling for the retail real estate sector to crash because of Amazon and online retail. And I guarantee everybody listening to me right now, watching me, drove by a shopping center and there were stores there and there were cars in the parking lot, and retail is not dead. Okay. Are there malls that should be torn down? Sure. Are there shopping centers that were built in the path of growth that never happened? Sure. Are there office buildings that we should tear down? Sure. Okay. Or repurpose. But it's not a wholesale Armageddon that's going to happen to offices. We are in this pendulum swing where we swung way too far in one direction to a hybrid work model. And for a variety of reasons, we're kind of stuck there. But pendulums never stay in one position. Okay, they either fall to the middle or they swing in the other direction. And at some point, we'll be back to back to work. One thing I'll say about office leases: when you hear these stories of New York City, I was paying $110 a square foot, and now I'm moving into the space of $45 a square foot. The landlord's taking it on the chin. No, the landlord's not taking it on the chin. The tenant that signed that lease at $100+ a square foot that never occupied it, okay, is subsidizing that rent. And the story I'll tell, and for those of you who are fans of the movie Moneyball, like I am, okay, there was a scene where David Justice was in the batting cage and Billy Beane walks up to him and they have this conversation. The Yankees were subsidizing David Justice's salary to get rid of David Justice and send him to the Oakland A's. That's exactly what's happening. Advertising agency in New York thought they needed all the space. They didn't need it. So they're subsidizing $50 a square foot to not have to pay $150 a square foot. And some accounting firm or some law firm or some engineering firm is taking that space. So it's not the landlords. And if the landlord's still getting their rent, the commercial real estate market's fine. There's going to be a repricing of rents in major cities, no question about it. But it's not going to be repriced to the level where there's wholesale bankruptcies, okay? Wholesale bankruptcies took place, and I've lived through 3 of those cycles, starting with the savings and loan crisis when I got into this industry. It's because the amount of debt on properties was so wild relative to their intrinsic value or their replacement cost. That's not what's going on today. That happened in the single-family residential business that caused the financial crisis. But there's not debt on an office building in New York City that's in excess of its replacement cost, okay, on a per square foot basis. So this will work out. There'll be some bloodshed, but it's not going to be like the days when Olympia in New York, the biggest real estate developer in the United States, filed bankruptcy, right? It's not going to be like that.
So I will write notes of anything, and it's clean. I thought that was a tight as hell argument. I wrote down that I should mention to you that somewhere about 1945, we stopped calling them movie houses and we started calling them theaters. I think that's
but that is a constitutional argument about free speech because you can't yell fire.
Do they say
in a crowded
movie houses?
movie.
I thought it was can't yell fire in a crowded theater is what I say.
No, I thought it was movie house, and it's the same thing with the definition of indecency. You know it when you see it.
Exactly, okay? I remember that.
Or your OnlyFans subscriptions. Either one. Either one.
My OnlyFans account. I'm actually a content provider. Bobby.
So let me ask you, Mitch. Then you're not saying that there's no problems. You're saying that the problems are very surmountable.
They're surmountable, and they're not so widespread as to cause a systemic crash of our financial system, which some are calling for largely political reasons. Listen, I love Larry Kudlow too, but when Larry Kudlow uses the talking points about commercial real estate and housing and blames it on the Bidens, I love how he pluralizes the Bidens, okay, and the inflation that caused interest rates to be so high. I think there are problems, but they're not something that's so systemic that it's going to cause a Bear Stearns or a Lehman Brothers or any of this stuff.
So do you think there could be any sort of a kick into the municipal bond area? And here's why I ask this. I know of a specific story. We'll say it's in Kansas City, Missouri. It is, where there's an office building owned by Oracle. A friend of mine's he works in private equity, and he said that they were going to repurpose the office building to residential, but they were not allowed by the municipality because of the tax receipts, because they had to repurpose it into residential, which would lower the tax receipt. So Oracle was essentially stuck paying the higher tax rate that a business would pay that a residential property wouldn't. And the building remains empty. And now Oracle's actually taken them to court to try and get it repurposed. So it always seems to me when I hear these kinds of things, not in your opinion, but this kinds of sort of, that these are dominoes, right? Yeah. And somewhere there's going to be somebody left holding. That doesn't really apply to dominoes. It applies more to musical chairs. There's going to be somebody standing without a chair. And where do you think that leads? And you said it hurts risk on investors, which is equities to me, right?
Right. So I think you're going to see bigger problems if you want to stick with the muni market story for a second. I think you're going to see the Kansas Cities of this world. They're going to see St. Louis's. You're going to see a lot of cities that aren't gateway for commerce, that have office buildings that are empty, and there's no the process of rehabilitating a downtown and converting it into a residential use when the city isn't really designed that way in terms of where the suburbs are and where mass transit is and where the roads are. It's really hard. That's not the way in which a lot of cities sort of grew. And there were downtowns that were dying. There were downtowns that were dying. Listen, I've said this before. COVID just hyper accelerated trends that were pre-existing. It didn't create too many new ones. Okay. And one of the trends that it hyper accelerated was the death of a lot of these cities' downtowns. Listen, Detroit was dead. Cleveland was dead. Dan Gilbert, can buy as much of downtown Detroit as he wants. But how many, Quicken loans are going to move? He
Detroit,
can move.
I'm sorry to interrupt you, Mitch, but is Detroit the example that a big town could die the way, say, a Gary, Indiana did?
Yep.
Or is Detroit not big enough to qualify for that? Does it have to be like a Chicago?
No, I think Detroit's big enough. But here's the thing about Chicago. So Chicago and New York have something in common, which is good luck doing anything without a labor union. Okay. Right. And if you look at the rents in a central business district office building in the Loop, and you compare it to the rent of a CBD office building in Manhattan and Midtown, okay, there's a big difference. Midtown Manhattan rents are probably 4 or 5x what they are in the Loop. And I don't know that rents in the Loop have moved all that much in the last 30 years. Okay, they've probably grown, but they haven't kept pace with inflation, not CPI inflation, but real estate value and appreciation. So good luck building and making economic sense out of it. So what's going to happen? We won't meaningfully add to supply of office buildings in central business districts in this country for about 10 years. That's what's going to happen. And we'll absorb what we have. That will fix the Chicagos of this world. That'll help the New Yorks of this world. Boston. Boston's interesting because they made the city bigger by filling in the waterfront. Okay. And that whole South Boston area. But I think the Gary, Indianas, the Cincinnati's, maybe Cincinnati because of Procter and Gamble and a couple of other companies have an employment base. But the St. Louis's, some of these places are going to have a really, really hard time. But riddle me this. Why is it that Indianapolis, Indiana or Minneapolis, Minnesota have these really robust downtowns and they're vibrant and they have companies there? Because government thought about it well in advance. Tampa, Florida, which is one of my best case studies, and the former mayor of Tampa, Florida, Bob Buckhorn, happens to be a good friend of mine. Those mayors, both Republicans and Democrats, thought about building the downtown and making it robust. They looked at the Riverwalk in San Antonio, Texas, and they said, wow, we have a river in Tampa. Let's do the same thing. Tampa has a vibrant downtown. This is before the mass exodus from the Northeast, people moving to Tampa. Okay. And when municipal government deregulates and creates a reason for businesses to be there and is business friendly, and when mayors do their job and become a liaison for corporate America to want to move there and find ways to get companies to relocate, it works. But when you have these cities which have governments that are pointing fingers and too concerned about whether or not we should defund the police and not figuring out on how to rebuild the downtowns, that's why you get these, just film the next episode of The Walking Dead there, because there's nobody there. They could just, and it's ironic that The Walking Dead was actually filmed in Atlanta because the downtown in Atlanta was dead for a long time until they figured out how to get their act together and make the downtown someplace that people wanted to live. Los Angeles, to their credit, did an amazing job, right? You built the Staples Center, you built the downtown up, you had a reason for people to be downtown, and it works.
You said mayor's job to be a liaison with companies, and I put that third on the list. Mayor's job number one is to tackle crime in urban areas. Job number two is to make sure you have a safe, efficient, and effective means of public transportation. These are not only things that our mayor in Chicago has not accomplished, he appears to be actively trying to destroy those things, which to me, am I crazy? I look at, you said the defund the police. I always make the argument that Brandon Johnson ran on a pro-crime platform. defund the police, no cash bail, no pursuit of criminals, decriminalize thefts under 1,000 or whatever it was. And even if like people say, well, he didn't actually say that, he didn't come out and say against it, and they're doing it.
He did not say it.
He did not say it, and it was his job to not say it. Is it fair to say that Brandon Johnson ran on a pro-crime agenda?
And by the way, I think he ran on the, hey, I'm not Lori Lightfoot. Vote for me. She was really bad. By the way, the idiot who's the mayor of the city of New York right now, who's a former cop, okay, he basically ran on the, hey, I'm not de Blasio, okay? But he was a former cop, and he was in the district attorney's office in Brooklyn. You would have thought he had some credentials. By the way, talk to any dude in uniform or dudette in uniform, and who was on the job with that guy, and ask cops in New York what they thought of him when he was a cop. You're not going to get too many people saying, "Oh, he was not one of them." He was,
right.
But you know what?
He's a clown.
But he's a clown, and he's more interested in being on airplanes, flying to California himself in bit parts and television shows. So
the whole thing makes my head spin.
Crime and quality of life are number one. Public transportation is number two. You are 100% right. But being an ambassador for the city does not mean you're flying around the world and going to Dubai and meeting with Sheikh Mo to talk about New York City. Okay. You're going to any place, you're going to meet a potential tenant in an office building and trying to peddle tax incentives to get them to move there.
Exactly. Yep. Mark Benioff, you talked about Larry Ellison, about Oracle. Yeah. Mark Benioff, one of my favorite stars. And I want to get, by the way, in 2 seconds, people, after this real quickly, we're going to get to like the investable parts of the real estate market and how to do it. But Mark Benioff in San Francisco, like for decades, he's pushing these people who are promoting these pro-crime policies. And then last year in his conference call, he's like, yeah, I'm thinking about moving out of the city. The crime's too bad. I was like, we have one of my good friends is a good friend with Mark Benioff. So, but again, Mark, if I'm getting any of this wrong, come on and tell us. If not, you are a moron. Okay. Or you're just duplicitous.
My worst trade ever was not buying more and then ultimately selling Salesforce, because I spent time with Mark Benioff in person twice, and I was like, this dude is cuckoo for Cocoa Puffs, right? Like, and geez, like I totally blew that trade. That was like 300% ago. But I said, this guy's running the company? Are you kidding me? Like with the Leon and Ohana and all these Hawaiian terms. I mean, you're right. You're a Jewish guy from like Marin County. What are you doing? You're not Hawaiian.
He needs better.
I got 2 quick comments from a friend of the show. He's also a friend of mine, who said that. What did he say to me? Mitch is 100% right on retail CRE. He's in commercial real estate down here on the west coast of Florida. And the second thing he said, Bookvar's post after the Fed. Tell me if you guys can tell me the band. If you choose not to decide, you still have made a choice.
I know the band.
Yeah.
I can play this game all day. Mitch, do you?
I was going to say Steely Dan, because when in doubt, just guess Steely Dan.
Oddly, I consider that close. Go ahead, Jimmy.
Band is Rush.
That's right.
And a buddy of mine has a playbill from the local high school here from about 1973, where the featured high school bands playing in the gym was Rush warming up for Kiss. And they booked it like 6 months in advance. I can't remember what year it was. But in those 6 months, Kiss had already become Kiss. Like when they booked it, they weren't. And then all of a sudden there was a Kiss Army. So at the local high school, those 2 bands played. By the way, it's a little piece of trivia for you. So,
I was in the Kiss Army. There's another little known piece of trivia.
I don't doubt that for a second.
That's the early days of ink. I had it on my face instead. I had the makeup.
Oh, man. Okay, let's talk about what are the investable segments of real estate right now. We had Jared Dillian, who wrote No Worries About Money, and it was a great book and his investing style was basically 20% real estate, 20% gold, 20% stocks, 20% bonds, 20% short end cash. And the real estate portion of it, he gave what he thought was the right ETF. Bobby, this might be more of a question for you than it is for Mitch. Mitch, what are the investable segments of the real estate market?
Well, if you are in a real estate ETF, like a REIT ETF, and you're in it for the long haul and you reinvest the dividends, it's like any other income producing asset class. And I don't think it's going to reflect the true economics of real estate. The problem with the REIT, and by the way, the REIT isn't new. Eisenhower signed the legislation that created the real estate investment trust. But as an investable way of getting into real estate, it democratized real estate. It was the biggest game changer. But REITs don't trade like the underlying fundamentals of real estate. Okay, they're overly interest rate sensitive. They're sold to people as a fixed income alternative in periods of low interest rates, and they don't really behave like real estate. If you want real estate risk and you're a retail investor, it's really, really hard to do it. How does the average American do it? They buy a house and they rent it out. That's how the average American does it. Okay. Mom and pop landlords exist all across the country. And every time we talk about legislation that could potentially help or hurt, and it happened all throughout COVID, they completely ignored the fact that most Americans are mom and pop landlords. And so that's the best way to do it. The problem is the shittiest job in America is being a landlord. The worst. Yeah. There's no worse job than being a landlord. So the problem with real estate for the average retail investor who has 500,000 of investable assets or less, getting access to real estate as an asset class for the 100,000, the 20% that you can't do anything. So you're stuck in an ETF and it really doesn't. But if you're an accredited investor and you have more investable assets, you have more choices in real estate. The problem is RIAs across the country have, by and large, for those clients who wanted that allocation, sold them non-traded REITs as a way to get their high yield to broker products, as far as I'm concerned. And they don't necessarily, there's zero liquidity in them. So if you ever need your money out, good luck getting it out. If you own shares of Simon, you could buy it in the morning, sell it in the afternoon, no problem. A REIT ETF, you could buy it in the morning, sell it at night, no problem. But it's really, really hard. And that's why most Americans, and by the way, I've noticed this, people who are first generation Americans are more prone to storing wealth in real estate as opposed to public equity markets. Because where they came from, wherever on the planet they came from, the real estate was a great store of wealth. And you find a lot of first generation Americans have more than 20% of their investable assets in real estate.
Yeah, to what Mitch just said, my favorite REIT is USRT, which is the iShares REIT. It's down over 7% with housing prices approaching record highs. You know, and commercial real estate not struggling as much as maybe we thought 12 months ago. So it's not, it's a good REIT if you want a REIT, but it's not real estate focused the way that you would think it was for a REIT. I actually, if you want exposure to commercial real estate, I like Jones Lang, I like JLL because it's a very predictable stock.
Yeah, Jones Lang, CBRE,
right.
Those companies, the problem is their revenue stream is heavily impacted by the lack of transactions in real estate, less leasing transactions and less what they call investment sales in that industry when, you know, somebody buys or sells an office building or something or an apartment building. Right. So their revenue's off. It's a great way to have exposure to real estate. If you're in it for the long term, they're probably priced at a good discount relative to their fundamental value. But they're services companies. They're not asset based. Their assets are their people.
Right. So if somebody's got like a 30-year lease and the building doubles, you get none of that with Jones Lang. Right. But the stock is a very predictable mover.
Yes.
Like Jimmy, for your information, it moves very technically.
Yeah.
So you know, somebody likes,
But the problem is they're one analyst report a lot of those away from getting their teeth kicked in.
I hate analysts, man. That's a whole nother thing. Analysts, to me, I was on Bloomberg one time on a split screen with a guy in London. We were talking about the British pound, and I'm going to make the numbers up, okay? But we'll say the British pound was about 150 to the dollar, or vice versa, I should say. And I said, it's going to go to about 165. And the guy said, well, I actually think it's going down to 98. So about 3 weeks later, it went up to like 170. I was right. Then it collapsed down to 89. They had us on again then. And they said, Bob, you were wrong. I'm like, no, I wasn't. There's a time he just waited me out. He didn't get stopped out. I would have gotten stopped out if it went right to his target.
Show me his trades. Show him where.
We're just, analysts, they don't have skin in the game like the three of us do in our respective industries. And it just drives me crazy. What friends of mine will call me up. All the analysts say this is a buy. Why is it going down? I'm like, I hang up. That's why I miss the old phones where you could click and they heard the click.
Heard the click. Yeah.
Oh, I miss that.
But the whole model is that it's better to be wrong as part of the herd than to be wrong stepping out. You know what I mean? Yeah. So the analyst model is busted. A lot of it's busted. Is that like it and that goes everywhere. Like even with the Bears and their draft pick, it's better to be wrong picking the Caleb Williams because that's what everybody said you were supposed to do. It's better to be wrong doing what the herd said, which that makes me sad, but it's a very, very real thing. And it's that way in the analyst thing too. Whatever happened to that Dick Beauvais guy? I was on a couple of shows with him, the bank analyst, and I thought that guy did not know much about the way banks. I'm insulting everyone. It started with the Mark Benioff thing.
Well, but you know what's interesting? I'd rather be wrong and admit that I'm wrong on television than agree with the next guy. And I'll tell a 30-second Mark Benioff story. I was at a dinner that Mark hosted for the 1-year anniversary of his family office's ownership of Time magazine. Long story as to why I was there, but I was there. And the editor-in-chief of Time at the time was a lovely guy, went around the table and he said, let's have dinner conversation, talk about who should be the person of the year. And so we're going around. Everybody around the table said Greta, that petulant girl who was screaming about the climate.
Come on, really?
Okay. And they were saying that because, Mark's buying trees to save the planet, okay? So it got to me, and I was sitting next to the deputy editor-in-chief of Time. So this guy, legit journalist, dude. And it got to me, and I said, I think Boris Johnson. And everybody looks at me like, Boris Johnson, like he's not Greta. And I said, I think it's Boris Johnson because the Brexit vote was going back out, right, to the people. And I said, and if they confirm Brexit, then basically the map of Europe politically will have changed. And I think that is noteworthy. And that's about when your person of the year thing should drop. So stick Bojo on the cover. He's got awesome hair. And I said, you're never going to stick Nigel Farage, who led the Brexit party. You're never going to stick Nigel Farage's picture on the cover. So make it Bojo because he's been basically pushing for it. And, but it was a herd. Everybody around the table basically was talking about the environment and Greta. And I'd rather say something thoughtful. I could be wrong. I say to Stuart Varney all the time. He always says, Mitch, where are mortgage rates going? And I give him a number. And I said, Stuart, you keep asking me about mortgage rates. Can you pull the tape of when I said that they were going to 2? like I'm wrong. You want to keep asking me. That's fine. But you know what? I'd rather be wrong with conviction at the end of the day than just say what the other guy said.
Well thought out conviction. I agree. And we're traders. We're wrong usually more than half the time. Just we're hoping that when we're right,
you're really right. You're really right.
Yes. Exactly.
Well, but you guys use leverage. So when you're wrong, you've protected your downside. You lever a trade when you're right. Okay. It's like a 4-leg parlay if you're a sports bettor. Okay. You don't need to be right all the time. Okay. You bet $10 to win 200 when you hit. You can hit a lot. You can miss a lot of times 10 to win 200.
Bobby, what do you got? You got anything more?
Yeah, my last question for Mitch is, why is it that you guys have collars and buttons and I don't, and somehow I'm dressed down? Other than that, we're basically wearing the same clothes.
Yeah, why does this
sleeves rolled up? You got short sleeves on.
I met an investor for lunch, and I met on Palm Beach Island, and at the Breakers. And I just didn't want to look like a slob in the Breakers. I'm not saying, Bobby, that you look like a slob.
Here it comes.
Hey, yo, hey.
I got to get all upset. Hey, yo.
Hey, yo.
Next thing I know,
where can people find you? And you're going to, I'm bringing it back up again. I do want you to send me some info on the homes you're building in Florida. That to me is wildly fascinating. I don't know.
I'm going to call you. I'm sorry, Jimmy, but before you go, are you one of those people that accredited investors can reach out to?
accredited investors can 100% reach out to me.
We can't advertise that. Obviously, it's illegal
No,
for us
no.
to do that. But
right.
I'm
But
saying
I
they
am
can reach out to you.
I am a principal in a private equity firm. I'm the chief strategy officer of said private equity firm called Madison Ventures Plus. We're here in Florida, based in Palm Beach County. And we have a bunch of real estate portfolio companies. And if you are, in fact, an accredited investor, you can absolutely find me. And we're happy to talk. We're always raising capital for something. But we are very bullish on attainable workforce housing. That's a big part of our core strategy. And the only way to do that is differently from the way everybody else does it. And that's what we try to do.
It's fantastic. I told you, people, you can think whatever you want about Bobby and I, but we get excellent guests, and we did it again today. Mitch, this has been a great conversation.
Whose hair is better, mine or Art Hogan's hair, though?
Art Hogan's hair is a little bit better.
Yeah,
but by the way, this is like comparing Jordan and LeBron, in my opinion. Art Hogan's got
there's no comparison.
Okay, thank you. There's no comparison.
There's no comparison. LeBron is a crybaby.
Oh, did you see that one play the other day where he's stomping his feet? God, he's
Stop it.
I had somebody actually say to me when I said that Jordan's better, he goes, well, I think the tape says that LeBron's better. I'm like, what tape are you
wrong? We were
the only tape that is relevant is the tape on the ankle of the defensive player after Michael Jordan crossed him up and broke the guy's ankle. Okay.
Yeah. He's physical. He's more physical than LeBron, even though he's skinnier. Okay. Yeah.
I was a Knicks season ticket holder for 25 years. If not more. I watched Michael Jordan drop 55 when he came back from
the game exactly.
Minor league baseball experiment.
You
can fill in those air quotes with your own word. That's like Mad Libs. But I think he was the single most dominant player I've ever seen in my life. I put Magic in his company. I put Kobe Bryant in his company in terms of what I've seen. There's a whole bunch of guys. Larry Bird, my favorite New York Knick of all time. His jersey's hanging up on the wall. Bernard King, one of the most dominant players of his. Didn't have a long enough career. There were guys who just literally were dominant and could take over a game. LeBron James is a top 50 player of all time. But do not compare him to Michael Jordan.
It's an awful comparison. Sorry I brought it up. But I will quote Bobby Knight. When who picked number 2 in the 84 draft? Houston, then Seattle?
Yes.
They were like, he was consulting with them, and they were like, but we need a center. And Bobby Knight, supposedly exasperated, just screamed, just draft Jordan and play him at center.
What, Sam Bowie? Did Sam Bowie go for Michael Jordan?
He did, yeah.
Was Olajuwon, right? It was Olajuwon, Sam
Bowie, Jordan.
And by the way, Houston always said, the Houston faithful always said that, Jordan's a better player, but we were not upset with who we picked. I mean, they have 2 championships.
I didn't watch a lot of Bill Russell playing basketball in my life. Okay. I was too young. I was more of watching Robert Parrish play for the Celtics than Bill Russell. Okay. But, and I have Robert Parrish's basketball up there even as a Knicks fan. But I'll tell you, that Hakeem Olajuwon was a force in nature. Patrick Ewing was a great center. He wasn't the best, but he was a great center. And in the 93 series, Olajuwon annihilated Patrick Ewing. It wasn't even close.
I always say I'll take the 84 draft, which is Olajuwon, Jordan, Stockton, Barkley, and I throw in somebody else, me.
Yeah.
And then you can take the rest of the whole basketball universe from George Mikan to whomever, and my team will beat you with Olajuwon, Barkley, Jordan, and Stockton.
Yeah.
But anyway, we got to go. I got to work today. I got to go to my restaurant.
All right. Go make a living. All right, guys.
Remember what our mission here is. Both Bobby and I are both kicked out of mainstream media. We want to have platforms where people can say what they feel without repercussions from sponsors. And we want to thank Tradier for providing that for us. Thank you guys for being here. This has been Trader's Edge.
Thanks, Mitch.
All opinions expressed by Tradier Hub contributors are solely the contributors' opinions and do not reflect the opinions of Tradier nor its affiliates and or subsidiaries. You should not treat any opinion expressed by Hub contributors as a specific inducement to make a particular investment or to follow a particular strategy, but only as an expression of their opinion. The contributors' opinions are based on their own personal research, but neither Tradier nor its affiliates and or subsidiaries warrants its completeness or accuracy, and it should not be relied upon as such. Any trades or positions discussed or referred to by contributors may or may not be actual live trades or positions. Such information is not intended to be financial or investment advice. Tradier Inc. is the parent company of Tradier Brokerage Inc. Tradier Brokerage Inc. and Tradier Inc. are separate entities with their own products and services. Securities products and services are offered through Tradier Brokerage Inc. Tradier Brokerage Inc. is an independent subsidiary of Tradier Inc., all rights reserved, member FINRA SIPC.